Let's take a look at some charts on Ethereum for this week's article on Brave New Coin. So we'll start with hash rate and difficulty, which have increased ever so slightly in the past few weeks. Definitely up from the January lows where hash rate hit almost a multi-year low due to a difficulty bomb that was diffused in a hard fork in early January. Now, the whole idea of these difficulty bombs is that Ethereum will transition to ETH 2.0, which will provide proof of stake for the network. In addition to that, they also have a protocol change for the consensus algorithm called progressive proof of work, which is meant to keep ASICs off the chain. This is unlikely to actually be implemented unless ASICs return in a big way to the chain. There aren't really any new ASICs that I'm aware of that are being developed for the ETH hash algorithm. If I was a miner or ASIC producer, I wouldn't want to get involved in Ethereum because they do want to transition to ETH 2.0, which will brick your ASICs. On the other hand, you can always mine ETC if ETH eventually does just kick everybody off the network or implements ProgPow. In any case, I think ASIC manufacturers would rather work on other projects where ASICs aren't really under threat of being removed from the network. So because of that, I don't think hash rate's going to explode like it did in 2018. Some of this, but not all of this, was ASIC manufacturing related. New ASICs got turned online. Some of this, but not all of this, was price related. Now, if price creeps way up, you will see a increase in hash rate. Here are the ASICs on the network, minus the Lindsay ASIC. I don't know why it's not listed on this website that I check all these things on, but you can see 2018, 2017 was kind of when they all came online. Nothing since September 2019, except for Lindsay, which I don't even know if it's just proprietary or if they actually sold any, but all of these are in heavy profitability. If I'm an ASIC manufacturer and I can do multiple algos efficiently that include the eth hash, whatever, however you say that algorithm, I mean, that's the way to go, right? Because you can have automatic switching between networks if ETH goes out of profitability or profitability declines. You can switch to the ETH algorithm if profitability goes way up because price is increasing, that sort of thing. That's the benefit of multiple algo ASICs. Looking at blocks produced in the line here and inflation in the fill, you can see that inflation is historically basically the lowest it's ever been effectively other than pre-January 2020. Blocks produced per day at the highest point ever. Block times at 13 seconds. It's great if you are sending things between people quickly, trying to anyway. The downside here is that many exchanges require maybe 20 confirmations instead of 7 in Bitcoin's case, just because of the time differential there. One of the big reasons Ethereum fees have been increasing, I'll show on the next couple charts, is this is Tether Ethereum in the line here, transactions per day, and this is Omni Ethereum or Omni Tether transactions per day. So you can see Omni Tether has basically declined since June 2019, May 2019, whereas Ethereum Tether is hitting close to all-time highs again, week-over-week increases since February this year. And you can feel it on the network. Fees are rising. Pending transactions are ranging around 100K. Gas limit is maxed out every day. So in the very, very near future, Ethereum is going to have some scalability issues if Tether becomes any more popular than it already is. This isn't even to mention some of the other DeFi stuff, which is taking a much less significant role in transactions per day and scalability problems, but is definitely a contributing factor in aggregate. Looking at NVT in the line here and daily active addresses in the fill. Daily active addresses basically at multi-year highs, super bullish. NVT in the middle median of the range historically. If it's sub 40, it's generally been super bullish. These times here and here, a little bit here. So I'd like to see NVT go down a little bit, which would mean we'd need a significant boost in on-chain activity. Now, I mentioned this in the article, but NVT doesn't measure DeFi-related stuff. It only measures like ETH to ETH transfers. I don't think it captures like DAI, SAI, any DeFi-related anything. So there's probably either the metric needs to be retooled for DeFi, inclusion of DeFi, or just a new metric altogether related to DeFi. Because DeFi is booming, definitely. And I think that's partly why we're seeing this massive increase in active addresses. Looking at ETH transactions per day in the line here and fees in the fill, you can see transactions per day, multi-month highs, not quite multi-year highs. 1 million transactions is kind of like my psychological, this chain is really doing something line for chains with fees, because if you don't have fees, you can have a bajillion transactions, but it won't really matter. So this is fees. Fees are rising. Like I said, they're not 50 cents. They're like 20 cents or something, 18 cents. But that's going to continue to rise if Ethereum gets any more popular and the chain gets any more popular. So to see rising transactions and rising fees tells me there's a bit of a scalability or bottleneck or something going on here. I mean, we saw it in 2017, most of the way, right? So if we hit 1 million transactions this year, I definitely suspect fees will get pretty dicey. But this is extremely bullish for any chain to see month-over-month rising transactions per day. ICO is pretty much dead. I just keep tracking this because it's slightly comical and very informative. Clearly the bubble popped June 2018 and it's just been nothing ever since. This was Leo, which wasn't on ETH anyway, so it shouldn't really be included in here. I just added it in anyway because why not? It's a token sale. It was a raise. So yeah, tokens, ICOs are just kind of Dunskies. ICO treasury withdrawals, on the other hand, still have about 1 million ETH in the tank. So there's a bit of a glut supply overhang still for these treasuries. Some of these ICOs are going on their like 4th or 5th year at this point. Definitely not most of them, but some of them. So they're probably better managed than projects that finished in like 2018, 2019 and sort of need the cash immediately. So the more ICO treasuries we wash out of here, the more selling that happens, the better off we'll be in the future. I mean, right now we're seeing Jed McCaleb sell millions of XRP every month, and he's got billions more left to sell. So that's another example of a supply overhang for a coin that doesn't have a bullish outlook. This in and of itself isn't extremely bearish, but it's good to see down from 4 million to below or around 1 million. The big chunk here was the Digix DAO returning ETH to token holders last month in March. Looking at some DeFi stuff over the past week based on volume, it's pretty much all DeFi or exchange related at this point. It's good to see stuff like Hex and other complete scams just off the radar. The fact that Hex is even this high is a bit concerning. If you switch to transactions over the past week, you'll definitely see more scams. The scams tend to encourage multiple transactions in smaller amounts, just based on the nature of how they operate. So this is good for Ethereum in that they're growing up a little bit away from the complete scams into sort of rehypothecation, derivatives, borrowing, lending, margin trading, that sort of thing, on-chain. If we look at all the ETH locked in DeFi, it's around 2.5 plus million. So you'll notice 2.5 million plus the 1 million almost gets us to the previous point of 4 million plus in January 2018 that was locked up. So this is bullish in that it's locking supply, definitely. DeFi has had some exploits, hacks, or poorly written code. Every week it seems like there's some multi-million-dollar something going on with DeFi. But for ETH specifically, locking up more and more ETH is extremely bullish. This represents around 880 million in USD. Looking at Google Trends, I look at this for every coin I do because it's always good to see what's the word on the street, on the internet. Who's Googling what? What is Ethereum? Who is Ethereum? Why is Ethereum? Where do I buy Ethereum? Where do I sell Ethereum? That sort of thing. Any articles about Ethereum. And it'll pick up this early stuff, right? This early stuff. Usually it'll match price. Usually it's not necessarily leading, but it can be. And seeing these ticks up from zero, basically, is definitely bullish. It's not like, oh my God, sell your organs bullish, but it's pretty bullish considering most coins are just flatlining. the worst thing for any chain is to die in the dark, and Ethereum is definitely not doing that currently. Let's take a look at some technicals. We got Bitfinex long shorts, yearly pivots, VP, VR, 50, 200 EMA, volume, and RSI. First thing that immediately pops out to me is the longs on Bitfinex. Still at an all-time high. They're at a notional all-time high, which means the USD value of these longs even eclipses this previous USD value for longs here and here. So there's a lot of money right now sitting on the long side. Not something I want to see if I'm bullish, because it's a bit of a crowded trade. If this goes south, you'll see a waterfall cascade type situation where these longs get nervous, they sell, more longs get nervous, they sell, and then it just keeps going and going and going and going. That's what you don't want to see if you're bullish. You don't want to see any breach of this yearly pivot, any breach of these EMAs, which are about to cross bullish again for the second time this year. So the second golden cross for Ethereum. You know, you don't want to see it break 180. You don't want to see it break 140. So if it breaks 180, 140, you know, who knows how low this goes on the exchange, because there's just so much locked in the long side right now. Now they won't really sweat, they being the long side, you know, because some of these longs are long from the before the drop March 12th, and none of them closed. You'll notice longs just kept going up as price went down, which is what you want to see. You don't want to see longs, you know, increasing at all-time highs, certainly. So there isn't like an immediate worry here, but if this does go south, it'll get ugly. Volume keeps declining. I don't think that's a major issue, considering the amount of volume we had. This was a multi-year high, if not a all-time high for volume on Bitfinex for that day. RSI hit a multi-year low. RSI now is back near overbought conditions, but it's not necessarily looking reversally, or there's no bear div yet. What typically happens is you get a higher high, we go way oversold, and then on the next higher high, you get your bear div. So we're a bit of ways away from that. I'd expect that around 250, the previous high, 275, whatever this is. But it shouldn't be too hard to just visually see. Here's another channel called a pitchfork, showing somewhere around 250 for the median line. So a pitchfork has specific rules for anchor points, draws the channel, and then anytime during that trend, it's going to want to return to this median line. The happy trend is in the middle. The overbought, oversold trend is in the top and bottom. And if we break below or above, the pitchfork's usually invalidated. But for crypto, I've noticed that even if we go above or below the pitchfork, we tend to eventually return to some multi-year median of an existing pitchfork. So the rules are a bit murky in that respect, but in general, 250 plus looks good just based on where this wants to go. Now there isn't a lot of price history here. So over the next few months, when this fills in, it'll be good to look back and say, okay, this is for real. This trend is going to last because it's got all this price history here. It's got resistance here. It's got support here, that sort of thing. That's what you want to see over months going forward. Looking at the cloud, extremely bullish. Again, similar to earlier this year, we had a bullish Kumo breakout with that golden cross. But the previous bullish Kumo breakout was in mid-2019, which led to that bull run. No surprise here that we're getting more trending bullishness. I think it is a bit surprising that it's gone almost 45 degrees straight up. You're waiting on the bullish Kumo twist. It is a bit far from the Kijun, which is the cloud's version of the median line. So I'd like to see the bullish Kumo twist. I'd like to see the Kijun come up a little bit. Right now support is around 190, this flat cloud. So anytime you see a flat cloud like this, it represents the 50% retrace zone. And when it's below it, it wants to go back to it. When it's above it, it wants to go back to it. So that wouldn't be the end of the world for the trend. Definitely a buy the dip sort of situation currently. And lastly, looking at ETH BTC, bit of a garbly mess. It is going to have one heck of a time breaking the psychological zone of 0.025. Sorry, 0.025. There's a yearly pivot there. There's a historical support resist line there. If it does bullishly break out, I mean, the trend likes it. It's above the 200. It's above the cloud. If it does bullishly break, it's going to want 0.30, 0.036, something like that, in between there, basically to recapture the previous consolidation zone. So overall, fundamentals look bullish, technicals look bullish. I'm a bit concerned with scalability, which price-wise will probably be bullish. Any sort of governance issues on any chain, any sort of scalability issues, if it comes out of the other side, usually end up being bullish for any chain.